presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sure. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off on Friday, 3:07 p.m. Eastern Time. We got about 53 minutes left to go in trading, and this market showing no signs, I'll get it out, of slowing down just yet. Man, we got quite a market to the upside. Volume, not sure we're going to have the volume today. Looks a little bit light across the board, but guess what? Nothing in the way of this market right now. Now, we got earnings next week. We'll talk about that, but this VIX is telling you nobody is worried right now as the VIX continues to decline. We're down by 31 cents right now. We're at 15.08. We had a 14 handle yesterday. We were sputtering around at 15 for most of the part of this morning. And yeah, that is not indicative of any fear coming in this market as we trade higher with the S&Ps up by 0.4%, up 26 points at 64.28. NASDAQ 100, you accelerate higher. We got a couple tech companies with their numbers this week. We get some more companies coming out next week. You get Apple next week, Amazon. We'll get into those earnings. Meta, Microsoft, okay, many. Next week, we'll get into those. But yeah, we survived this week. Google shares, higher yesterday, higher again today by about 0.5%. Tesla, okay, you came into their numbers at almost 330. We're trading at 315. You were as low as 300 yesterday. Still a tough go around for Tesla shares, but you jump down to gold right now, jumping around for markets, down by $33. We talked about yields at the top of the hour. You get the 10-year right now. That's a 5-minute. You take a look at the daily, and we're talking about a 10-year that's positive by 5 ticks right now, and you got a 10-year yield of 4.39. Okay, 4.39. Now, what's so remarkable, I keep saying it, is you back it up. July 1st, we were at 4.19. 4.19. Okay, we're at 4.4% almost, and you have a dollar right now that cannot find a bid. And yeah, you're up today, up 294 ticks. But this is a series of lower lows, lower highs, and you are going to have pressure on yields in the formidable near-term future. Talking about Powell, talking about rates, and that's going to put pressure to the downside on the dollar. Doesn't mean you have to trade lower, but it's like having the wind at your back in terms of there's going to be pressure for yields to go lower, even on a 10-year basis when you're talking about a Fed, and that's going to bring pressure on the dollar to go weaker as well. Okay? It's important to remember that this acceleration in the dollar, okay, from 92 in June of 2021 to 115 had to do with our Fed hiking things in a manner we had not seen in some time, okay, and being ahead of the world, where we were the only game in town for yield. Everybody else caught up, but we were the ones ahead of the curve in terms of hiking. Well, we have quite a pullback going on, okay, but you went from 90 to 115. We've only pulled back from 110 to 97. There is more room for movement in the dollar. And 90 is the next natural technical point in that dollar, man. Many times you're pushing 90 or you're pushing 100, ballparking. Okay, you get a little bit lower, you get a little bit higher, size 103.82. But once you cross those lines, that's where the next logical spot is. That's where we were at the lows of 2018, the beginning of February, and that's where we were at the beginning of 2021, where you took off to the upside. Okay. Now, let's talk a little bit of earnings. So, we make it through this week, and now next week is basically the main event. On Microsoft. On Wednesday, we get Meta and Microsoft. Okay, remember, the M's go together and the A's to go together. I don't know why. But Meta and Microsoft on Wednesday, Apple and Amazon on Thursday, among many other companies, folks. Okay, just taking a look at the calendar here. Tuesday, they're talking about this one in the den, United Health. Okay, Tuesday, before the open. You ready for some volatility, baby? So check this out. Let's see what type of a move we got on UNH earnings. Yeah. And this is why you should understand options, folks. Even if you don't trade options, okay? Because if you had no clue about options, you wouldn't be able to go over here to the option chain and say to yourself, well, geez, that's the implied volatility with options that go through next Friday. Now, that's not the move that's around earnings entirely, because earnings happen on Tuesday. So you're still buying exposure for volatility that's factored in for Wednesday, Thursday, and Friday. But you can see that on a weekly basis, to go out each extra week, you're only talking about what? $2.50, $3.50, $3 per week of volatility. But next week, $24 on a $282 stock. I'm not sure they're going to be able to provide you the basics of this. And folks, they do have criminal behavior going on. Okay, the articles that I've read on this company just over the last years always made me think, how is this legal and how are people not in jail? How are they not clamping down on them for fraud, for billing, for Medicare fraud, everything? Okay, I don't have enough time in this show, and I should make a 1 hour just show that can run in perpetuity on the amount of articles. And it's great articles written by other people, folks. You know, in the Journal, in Bloomberg, we talked about them at the time. But don't look for some magnificent resolution here. As in, they are deep in it, man. That's it. So they're out with their numbers Tuesday, okay? Also on Tuesday, PayPal, Boeing, UPS, Procter & Gamble, okay? Starbucks is after the bell. Visa after the bell on Tuesday. Now I'm just cherry picking. There's other ones in here as well. Wednesday before the bell, Kraft Heinz, Humana, Etsy, Harley Davidson, Generac, Altria, and then Wednesday after the bell, the real main events begin. Meta and Microsoft. Also Wednesday after the bell, okay? Robinhood. Talk about some volatility recently, man. Whew. Look at this thing. Up another almost 3% today. $104.84. So they'll be out with their numbers, as I mentioned, on Wednesday after the bell. Yeah, and how's that? You're looking at about a $10 move in either direction, which is a 10% move priced into this equity by next Friday in either direction. Well, when you can pop 3% like it's nothing on a Friday, you better believe there's going to be some volatility around earnings week. Okay, Bookings Holdings, they're out by next Wednesday as well. Cheesecake Factory, we get Caesars in there. Excuse me, no, that's Tuesday. Jumping around. Robinhood, okay, you get AMET on Wednesday as well. Lam Research, Qualcomm, Ford. I can't go through all these equities, okay? And then on Thursday, CVS, Roblox, Norwegian Crude Line, Kamiko, CCJ. You talk about through a rocket ship, man. Look at that Kamiko one, pushing $80 yet again. MasterCard, Cigna. Thursday after the bell, Amazon and Apple, not to mention Coinbase, Reddit, Roku. And then on Friday, how about the gas companies? Exxon, Chevron. Big week next week. Stay tuned, folks. We're coming right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And yeah, how about the CCJ? Might as well take a look at it. So there are their numbers next week. Okay, but if you're in this equity, I've talked about it before. Short term, might be time for a breather. Okay, and let's take a look at the volume as well. But anytime, folks, you complete the A to B, C to D at a 1 to 1.618 expansion, okay, that price level, and it's not for some reason. The reason is because you just traded from $35 up to 80 in the span of what, 3.5 months? Okay, and that 35 to 80 is a 161.8% move of the move you had in a 3-month period last year towards the end. 1 to 1.618 expansion, but on a volume basis as well. I mean, it's so cool how this lines up, right? How do you come into this high? And this is a textbook case of how you want to see equities move, folks, okay? How do you come into this high? Well, how do you do it? You come up to that high, and then you break it with tremendous volume on June 9th, the week of. That's how you do it. That's what gives you legs. Where's the volume since then? Well, we had 30.6 million the week of June 23rd. That's July 4th, so that's going to be an undershoot. But nonetheless, then you do 26.5 million, 26.7, and we're going to be light this week as well. Not exactly the volume we want to see when you're breaking higher on this type of a volume over here, and you're getting above this bar of June 23rd, where we did 30.6 million. No, you're doing 26.5, 26.7, and we're probably going to come in at about 23 million today or something like that. Longer term, yeah, I'm not touching this equity. I have some of this in the longer term portfolio, folks, and boy, you know, you're really cherry picking lows back here, but just this low we had in April, okay, and uranium's the future. And not like I'm exaggerating, but yeah, nuclear reactors, man, power, right? Power grids, all of that. All right, let's talk about some of the economy. So it's interesting, 2 headlines. All right, let's go to this headline first, which is on Bloomberg, rightfully so. Stock bull run powers on as the S&P hits a new high. This is, I think, the 5th consecutive record high we're going to put up if we close anywhere where we are right now, near where we are right now. And then I see articles like this, which is banks are getting pickier about whom they want as credit card customers. New account openings across the 4 big lenders were down 5% in the second quarter from a year earlier. And why would that be? They're worried about the consumer, folks, period. End of sentence. You can make distinctions about why they're worried about, and this is talking about lower-end consumers, okay? The rich are doing very well. The haves and the have-nots, right? The haves are powering this economy, okay? But yeah, banks have raised qualification requirements for lower-end customers that tend to be at greater risk of missing payments. Well, they lower-end customers are at a greater risk of not being able to pay the bills. The highest fast and growing part of our card business has been with the heavier spenders. Okay, yeah, it's all about the high end on this side. But when you talk about it's growth, okay? It's growth in balances. So far, delinquencies have remained steady. The economy hasn't been derailed by trade tensions. But banks remain wary. That's the part I wanted to get to, okay? Yeah. And they're not just wary with their verbiage, like Mr. Diamond sometimes that will be out there worrying. You're talking about straight up, okay, new account openings are down. They're opening less accounts. That's not indicative of everybody doing well, market at all-time highs, no risk in the economy, right? There are cracks in this economy. Doesn't mean it's going to drive the market down to a bear, but keep your eye out for articles like this, okay? Because you're talking about credit cards, man, and you're talking about the lower echelon of earners. Yeah, there's a real potential for problems. At American Express, new account openings fell 6% from a year earlier. But the average fee per card is up 17%. Premium cards. Gotta love it, right? What a business plan. I'm going to make people pay for the privilege of me lending them money at 22% a year. Now, if you use those cards responsibly, you can probably reap rewards, but there's a reason why they're doing it, right? And not everybody, naturally, life happens, okay, bills come in, etc. All right, let's talk a little Mickey D's. So, I've talked about this equity many times, and we've approached the bottom part of this channel. If you haven't seen it, folks, check out this channel. I think I got to put it back to 2015. Let's put it on a monthly. Yeah, there it is, back to 2015 on a weekly basis. So well defined. You dip slightly below that area in 2024 on the pullback. Now we'll put it on a weekly so you see where that comes from. But look how often you're touching it. March of 22, October of 22. I don't even know if that's real in 2023 for that spike, but nonetheless, October of 23, okay. Got a little out of hand on the sell-off at the lows of July of 24. And then again, though. Right, beginning of this year, and then we literally touch it to the tick, folks. Okay, on June 23rd, the week of. Let's put it back to a daily so you can really see how close we came. Okay, you're talking about getting to a price of $283.47. Now, you talk about Mickey D's. This one's an interesting one from the Journal. It's a long one. Okay, I was out last night. I was reading it earlier today. How McDonald's lost its value edge and is trying to claw it back. And yeah, we're all aware of how much a Big Mac, especially when you start doing the prices of what McDonald's meals cost now versus something like the median wage versus something like what it costs to buy a house. Not even, I guess, wages, right? McDonald's stuff is so expensive compared to what it used to be per wages, okay? How about a $12 McDouble meal and $3 fries? $3 fries at this restaurant, right? But yeah, they're going to try and get back into it, man. And I would say that that's an important one. They're testing a $3 and less menu. So much for the dollar value menu, right? Remember those days, man? Those were good days. I had some good days, man, in terms of being at the right time, in terms of when you're making those poor diet decisions and you're not paying for it dearly, as in you're in college, whatever it is. Now, getting into the nuts and bolts of this, okay? At McDonald's, corporate offices in Chicago, this is cool how they break it down. Strategists analyze billions of dollars worth of transactions, of course. Marketers and finance employees review promotions that franchisees use locally and test whether they could be replicated nationally. Effective deals typically need a discount of at least 30%, depending on how long they run. That's the number they want, okay? Franchisees own and operate 95% of the 13,500 Mickey D's. In January, McDonald's pitched franchisees in Kansas and Oklahoma on acting as a testing ground, okay, where customers will be able to buy one item and get another for $1, as well as obtain drinks for $1 or $2. I mean, that's where, if you can do it, right? We'll finish this up. But in the age of where $5 footlongs on Subway was everything, dollar value meal, they're trying to bring it back. But it is very difficult with where we are. And that's what happens when you exponentially grow inflation numbers. We'll talk some Mickey D's when we get back, folks. S&P's up by 27. We'll finish up that. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. And yeah, I was just on the McDonald's app during the break there. And thankfully I don't. And hey, everything in moderation, right? Nothing wrong with some Mickey D's, man. It's some delicious stuff, okay? My dad used to call them worm burgers at one point because I think the story came out that they were using worms in like the 70s or something like that to add protein. He call them worm burgers, McDonald's worm burgers. They must have meant something to that. Either way, maybe somebody can help me out. I'm sure that he's not the only one. Remember that? Nonetheless, you're talking about $11, $12 a meal, man. $4 for a fry, right? $12 for a meal from Mickey D's, and that's ordering it off Mickey D's, and they've done a good job at growing their app themselves, etc. But yeah, so when you get to this, when it talks about that $5 deal, okay, that they were talking about meals, they have to go to their franchisee. They have a franchisee board. The committee voted against that proposal in April of 2024. They're worried about pushing out $5 deals because of the cost. McDonald's leaders directly pitched franchisees for their support, so they went beyond the board. So they go to the franchisees directly, and this board they oversee the national group of franchisees. Roughly $1 billion advertising fund to back the promotion is what they were going for. Okay, and how they get it done? Good old Coca-Cola. They put the pressure on them. McDonald's helped sweeten the deal by negotiating with Coke, its beverage supplier, since 1955. How about that for a 7-decade partnership? No Pepsi, folks. Coca-Cola at McDonald's to provide $5 million in marketing funds. You gotta love it, right? The franchisees control $1 billion fund, and McDonald's gets them on board by having Coke pony up $5 million. Restaurants would receive some reimbursement per meal. They have to get reimbursed to push out food at $5 for a meal. Amazing, right? I love it. I love it, Duncan Steve. Our man Duncan Steve in the den. So tell me, where is Gino's Hamburgers? And tell me where I can get 6 for $1 right now. 1970, folks. 6 for $1. Hey, we digress. Yeah, the labor costs, all right, everything that goes into this, inflation, etc. But I just pulled it up, man. $12 meals. Now, here's what's wild, is that they're coming out with these wraps they have right now, and those wraps are $3. Okay, I saw this story earlier this week. I'm not even sure if they talk about it. Yeah, they're probably going to talk about it down here. Good old Ray Kroc. And if you haven't seen that Ray Kroc movie with Michael Keaton, oh, it's great. Yeah, and salaries and everything. They break it down. Like I said, I'm going to post this one in the Tiger's Den, man. This one, you can always tell. 16 minutes it would take you. Right? Yeah, 16 minutes it would take you just to listen to that on audio. It's a long one. It's a good breakdown. And the reason why I love it even more, folks, check this out. I'll post it in the Tiger's Den. Folks, get in the Tiger's Den if you're not in here. The reason why I love it even more is because this stock is in a well-defined channel line, and you're approaching the bottom part of that channel line. Yeah, and they go over the history of it all, man. Dollar drinks, dollar menu, etc. And yeah. Good old Taco Bell bringing them the business. Taco Bell released a menu of 59 to 99 cent option. How old are you, folks? The late 80s. 59 cent options. You have to laugh, man. McDonald's responded, and boy, did that pay off, the dollar value menu. I would get nothing else but dollar value meals, right? Give me a couple cheeseburgers, couple McChickens. Yeah, instead of a slow boost in sales, the new dollar menu delivered results within months. And who'd you have in there? Trump. Appeared in ads 2002, hawking the big and tasty burgers, turn on the dollar menu. And yeah, it was a success. Around 2008, man, by 2012, inflation had driven consumer goods prices up 28% from a year earlier. Hey, that's not much when you think it's only just compounding some numbers. 2003 is when things started to go bad. The dollar menu and more, with items ranging from $1 to $5, We knew it couldn't maintain $1 in 2014, but now that is a far cry from where we are. So much for the dollar, man. And folks, and this is where it was always tough, right? And I just closed that, but I'll post that article in the Tiger's Den. It almost makes sense when you survive, folks, right? Everyone, if you're in a survival mode, okay, food is so expensive. Time in the kitchen is very difficult for those that don't have the time, whether you have kids, family, job, etc. That one is easy to understand. The one that's a little bit harder to understand, okay, is paying $12 for a burger and fries from McDonald's. Oh, baby, folks. That's a lot of money to be paying for a burger and fries from Mickey D's. But yeah. So watch that volume on Mickey D's. We got a nice sign of strength from the bottom there. June 23rd, you get a bid, and we're pulling back on lighter volume, and I'm looking at this equity for a buy. And it doesn't mean you're going to, this equity just traded in May of 321. You're at 297. Okay. You're down $24. But at least I like the plan. And it doesn't mean that you're not going to get stopped out in the reverses, right? If you're making this play back in May, maybe you get stopped out on that pull lower. Okay. You're well without that channel. But there's been many times you make that trade. All right. Set your stop if you're making trades like this. You're trading to the bottom portion of this. But Mickey D's, man, you don't find many channels as well defined as this. Higher highs, higher lows across the board for a 10-year period. If you follow the program, you know this is the only other one that matches up. And I say the only. But TJX, similar action. Well-defined channel line, and look where you are. Okay? And look what we got going on right now, man. We got 21.7 million shares for TJX. And we'll see if we can get going into the close here. I don't think we're going to get above this volume of last week. It'd be nice if we could. 22.8. We're at 21.7. Oh, we definitely could. And if you ever want to get a good indication of this, folks, right? You're looking at the bar, I'm looking at the weekly, and I'm saying, okay, we're going to get some close of action here, but how much action are you going to get at the close of the day? Well, go see how much action you got at the end of the day yesterday. How much volume are we dealing with on close here? Oh, 1 million shares? Yeah. Well, we do 1 million shares, man. TJX is going to bounce off the lows, and they're going to do it with more volume. And that's your weekly. I mean, look where we bounce from, folks. How often have we been watching this channel line and look where you've bounced from? TJX catching a bid, man. Putting that on my radar. TJX flat today, but catches a bid this week. Markets, records across the board. Don't go away, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&Ps. You talk about just sailing into the 4 p.m. closing bell, folks. That is a minute chart. Look at this. You have right now, going back, and I'm not we'll call it 4 points. For the last hour and a half of trading, folks, the S&Ps are in a 4-point trading range. That's probably not likely to change over the next 18 minutes coming into the closing bell. All right, we jump around to some of the equities. Tesla gives back some of the gains today, but up by 3.3% right now. And as I mentioned, so we got Google and Tesla. Check it on Google this week. Google right now up by 0.4%. We got Microsoft and Meta on Wednesday. Microsoft up by 1% right now. Meta shares down by 0.3% right now. Look at that sell-off, off by $8. So Microsoft and Meta next Wednesday. Fed Day as well. Always interesting. They got to go after Chairman Powell. But this Wednesday's meeting, probably not going to be the one with the fireworks. September, different story. And then you get Apple and Amazon on Thursday. Apple as well, a little sell-off. Apple goes from about 215 to 213.57 right now, slightly in the red. Amazon shares down about 0.1% or 35 pennies at 231.87. So Palantir, it's not stopping, baby. Look at this run. Woo. From $5 to 160 over 2 years, 2.5 years. From 16, 17 bucks. This is a one-way trip. And from the COVID lows, from the tariff lows of $66 to 158. And you were talking about a company right now valued at one of the top 20 most valuable U.S. companies, folks. Palantir at $374 billion. My goodness, been quite a run. All right, we jump some other equities with their numbers. You jump over to Intel shares. So Intel, yeah, you talk about giving it back, man. Drops 9%, 9.2 to be exact. And yeah, there's just trouble across the board right now. They're going to slash foundry costs in its latest attempt to turn around its struggling business. I mean, a turnaround is usually not done by cutting costs. Usually, right? You come in, you turn around a failing business, somebody that comes in that has equity, and yeah, you got to come in, you got to trim the fat, okay? But usually some turnarounds might take some investments, and they're just trying to trim. And the market is worried. Intel beat on revenue and issued a sales forecast for the third quarter that also topped estimates. Okay. But yeah, the company said it's axing as in doing away with chip facility projects in Germany and Poland and slowing production at its Ohio plant. Management wants, they want some external customer commitments to pursue the node. But in the meantime, this adds more uncertainty to product roadmaps. Of course it does, right? Yeah, of course. Everybody would love to have the orders before you build it. I don't think Intel is in that position right now, and they're trying to be. So they've invested a little bit too much, actually, over the past several years, and they don't have the demand just yet. And they're pausing things. And how about their net loss? $2.9 billion. Man. Of that, $800 million is an impairment charge. And boy, you want to try and find a bid for this company, but you look at this thing technically, this was encouraging. February 10th, folks. Okay, you got quite an acceleration higher. You backed off on some light volume. You found a little bit of a bid on the week of April 7th on the 90-day pause in the tariffs. You had some selling June 9th, right? And this week we got some selling. You're going to be challenging these lows. The one thing I could say to you for a trade on this, if I was going to get into this equity, is that, you got a nice floor here. Okay, you got a nice floor around $20. You got a low at $17.67. If you're thinking about getting in it, I would advise you to pick a stop somewhere below where we're at right now. Because you might think it's a bargain getting into prices that you were trading at 28 years ago. 28 years ago. More than that. Almost 29 years ago, Intel was trading at this share price, folks. Hard to believe. But Intel down by 9.3% on their numbers. And talking about Microsoft and their SharePoint vulnerability, surprising it's not hitting the equity a little bit harder because the headlines keep persisting. And you pull it over, man. Probing whether Cyber Alert tipped off the Chinese hackers, a program to share information with cybersecurity companies, may have exposed unpatched flaws. So how do we correct that, right? You can't even tell anybody when you have an unpatched flaw. You tell a cybersecurity company, and guess what? You're telling the Chinese government. I'm exaggerating to a degree, but that's what they're investigating. Whether a leak from its early alert system for cybersecurity companies allowed those Chinese hackers to exploit flaws in that service before they were patched. Man, right? And they're reviewing it, etc. Seems even more troublesome, though, right? But guess what? The stock don't care, folks, and I put it lightly. So taking a look at Microsoft, 600 looks to be the number, man. Right? You break above this B point, okay, and you broke above that B point with some nice price expansion the week of June 23rd. And we got a 1-to-1 that brings you up to $597, folks, and it sounds crazy, but it's not that crazy. You're talking about a company right now valued at $3.8 trillion. Compare that to NVIDIA, man. Microsoft can catch up with NVIDIA. NVIDIA's got a $400 billion run advantage over Microsoft right now. And NVIDIA, it just don't stop as well. Almost no red in that bar from 86 up to 173. You jump over to Amazon, one of the more interesting ones. Having a little bit of trouble breaking above this high of February. That week of February 3rd on Amazon shares, you had selling at 244 million shares. You accelerate from the lows on dramatic volume. That was some nice volume on yesterday. And we're taking out the highs. You take out the highs earlier in the week with volume. Man, these equities, they have a lot of power and volume right now, folks. All right. We got the S&Ps right now. Up 25 points. We're coming into the closing bell. Stay tuned, folks. I'm coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets dipping down a little bit right now. And we have the S&Ps at 64.24. A little bit of selling coming into the closing bell right now. NASDAQ 100, a little selling dipping below where we were at about 2 o'clock as well. Those are minutes. Let's put it back for a 15-minute. All right, 23,418 right now. All right. And Amazon down about 0.2%. Nvidia shares down by 0.2% right now. Microsoft up by 0.5%. And Meta down by 0.3%. We take a look at some of the banks right now. JP Morgan up by 0.7%. Man, you talk about it. Bank of America higher by 0.2% right now. Yeah, we got a little bit of selling coming into the close right now. You got 5 minutes left to go, and watch out, folks. We just lost 10 points. So much for that 3-point trading range, right? And, folks, near the open, near the close, yeah, and, you know, Trump comments in focus, okay, about the EU deal, and yes, that's going to throw a little flux in things. You better believe that flux is already in the market right now, okay? And that's where price and volume is so important. And look at that volume. You're just sailing to lower volume numbers on a perpetual basis right now, and it's not going to last. We'll see if it goes, but we got a little bit of selling as people get position. Pay attention to the VIX as well, folks, okay? That's an important one. With the VIX at 1502, the market is not worried right now, and believe me, I hear you in terms of the uncertainty, the tariffs out there, but pay attention to that VIX. That VIX starts spiking, and the market hasn't spiked yet, that can be a great leading indicator. It's where Tim Ward gets the SPY VIX ratio, okay? When the VIX starts spiking, look for that one, because that is an indicator, but it's not doing it right now, man. We're about to finish with a 14 VIX. Folks, thanks so much. Have a great weekend. Have a safe weekend, and we'll see you back here Monday morning. Have a great